I'm Michael Cochran from BentOak Capital, here to give you a brief market update for August 2024. Please stay tuned until the end for an important disclosure statement. Stocks seem to follow their historical trend of weakness in August, with the strong performance in July quickly forgotten as the month began with the sell-off. This decline was initially triggered by weaker than expected economic reports at the beginning of the month, raising concerns about the economy slowing in the United States. Several additional factors contributed to subsequent selling pressures, including overly optimistic sentiment and high valuations. Investor sentiment, especially in the tech sector, had become excessively positive, causing some stocks to become overvalued. Second, seasonal trends. Late summer can be weaker for stocks, making it a time for softer performance and for investor sentiment to adjust to more typical levels. Third, increased scrutiny of AI investments. Concerns emerged about the returns on artificial intelligence investments, especially after signs of slowing customer demand during the second quarter earnings season. Fourth, specific financial leverage. The unwinding of institutional trades involving the Japanese yen forced selling by some institutional traders that have added to the market pressure. So what's next? Now is the time to remain calm. Market pullbacks and corrections are normal and part of the investing process. They are essentially tolls on the path to longer-term gains. Historically, the S&P 500 and its predecessors have delivered an annualized return of 11.5% since 1950, despite experiencing frequent drawdowns of over 10% each year, even during periods of significant crisis and disruptions. Turning to potential catalysts for a rebound, perhaps the most obvious one is the Federal Reserve. A 0.5% rate cut in September is now firmly on the table. Simply put, restrictive monetary policy is no longer necessary. Expect the Fed to begin adjusting their stance since the higher for longer policy has created room for cuts going forward. Other factors that could potentially help equity markets going forward include improved economic data, positive updates in key economic indicators in the coming months. Second, progress in unwinding these leveraged trades, successful reduction in these leveraged positions such as the previously mentioned yen carry trade. And third, healthy corporate earnings. We've seen strong second quarter earnings from S&P 500 companies with over 75%, exceeding expectations and demonstrating solid growth. As earnings season ends, we'll have a better idea of what companies see for the second half of the year. Despite potential economic slowdowns in the coming months, the fundamentals remain robust, suggesting that 2024's positive market performance could continue. While there may be some additional volatility, opportunities could soon arise, but bottoming in the markets is a process. At BentOak Capital, our team will diligently monitor market developments, economic trends, and relevant news, and will keep you informed with updates as this year progresses. If you know a colleague, family member, or friend who could benefit from our services, or if you have any questions for us, please feel free to reach out to our team. As we wrap up this month's video, we invite you to visit our website where you'll find a range of new, insightful blogs. Additionally, be sure to follow us on social media for valuable updates. Thanks.